Good morning. This is Tom Alexander. It is Sunday, October 30th. It is about 10:52 a.m. Eastern Time in beautiful Charleston, South Carolina. There is a lot going on in the markets. There will be a lot going on in the markets for the next couple of weeks. We have two extremely big events. We have one this Wednesday, the Fed meeting, where they are almost certainly going to raise interest rates. The consensus is 75 basis points. What will be more important than that will be what they say following that, immediately following that. And, we have a market that is very disparate in terms of the various indices and where they are from a structural perspective. This is a little unusual. The Dow is straight up. The SPX closed on Friday at a critical level and looks like it wants to trade higher. There's nothing but an elevator shaft above where Friday's close occurred until all the way up to 4120 from a practical perspective. The NDX, and let me show my screen here, which would be helpful so you know what I'm talking about. Okay. So you can see here's the SPX. We closed right at this level, this very important level. That includes the double top from back in September. Above here, there's nothing to 4120. The NDX is between levels. The Russell is in an elevator shaft that extends all the way up to 1906. The Dow is in an elevator shaft that extends all the way up to 34,281. Now, the indices are in different structural positions. The Dow is getting very extended from an auction market perspective. That doesn't mean it's overbought, but it does mean that it seems to be getting ahead of itself structurally. And it would not be a big surprise to see the Dow begin to balance, have some sort of retracement. The levels you see here on my screen are the very important upside levels and downside levels. The downside levels include, in every instance, in each of the indices, Friday's low. Now, to the upside, there are different levels. For instance, the NDX has not been able to trade above the top made, the double top from October 5th into, it was tested again on the 25th of October. So it needs to clear there. It needs to trade above that level to really confirm it's in a similar ramp position as the other indices. On the other hand, again, you have the Dow that has been extraordinary, particularly for the past 6 or 7 days. The Russell is also showing some strength here and is in the middle of nowhere. It's in an elevator shaft. So it's going to be a very, very interesting couple of days. It'll be interesting to see if they ramp this thing straight into Wednesday's announcement. The important thing here, if I preach constantly about not trading a narrative. And we have all this exogenous stuff out there that is inevitably going to affect the market. It's not smart to guess how it's going to affect the market. The smart thing to do is simply follow the price action. Right now, the benefit of the down in this market has to go to the upside because of the conviction we saw on Friday, because of the fact that the indices, in some case, the Russell and the Dow, which is sort of ironic because the Russell is the most broad-based, the Dow is the most narrow-based because it's 30 stocks. They're the two that seem to be all go. There's nothing above either of those two from an auction market structural perspective that would be quote-unquote potential resistance. The NDX is below potential resistance. The SPX closed at potential resistance. So stuff is all over the place. And then we have the Fed thing on Wednesday. So I don't really know. This is not a good time in my mind to be placing big bets from a swing trade perspective. And if you're day trading, The important thing is to follow the trend intraday. We do that at the live room every day. I'm not going to get into the minutia of that. That's its own, day trading is its own animal. But from a swing trade perspective, it would appear the Dow is getting a little extended and ahead of itself and ready for some sort of balance. But then you have really the SPX and the Russell and the Index looking as if they want to break out and continue higher. So it's truly a mixed bag. Now let's take a look and see what the technical information may add to the picture. And it too is sort of confirming you can make a bullish case, you can make a bearish case, as is often the case. The bullish case is that there is room in this work for the market to continue higher in terms of breadth. In strong trends, for instance, if breadth is approaching 10-day moving average of NYSE advancing issues, that's one breadth measure. In strong bull trends, when it gets extreme, it's just the beginning of the end. It's not the end itself. For instance, over here, when breadth reached this level right here, which is close to where we are, not quite, you can see from this close, there was another almost over 7.5% more rally left in the market. So if we were to rally from Friday's close, 7.5% more, just for fun, we'll go up in here. This is close enough, right? That would be there, and from this low, that would put the entire rally. It would be a little bit more than the strongest rally that we've had since this was this was almost a 19% rally off of the June 15th low into that August high. An equivalent amount of rally would be around this 4,200 level. So that's the potential. Now, that doesn't have to happen. This is correlation, it's not causation. Now, to make the case that, for instance, the Dow may be getting a bit ahead of itself, and if we do get some sort of balance, everything is going to participate. The breadth has been up 6 consecutive days. It's been positive 6 consecutive days. That's unusual. I think that's only happened twice since the March 2020 low. So on the one hand, it's showing a lot of enthusiasm. It's showing a very bid market. But then on the other hand, it's unusual for breadth to be this positive this many consecutive days. If we were positive on Monday, that would be 7 consecutive days. Another thing I want to bring to your attention is the fact that we have traded 6 consecutive days and haven't even tested what would be a low extreme down in this area. You can see how breadth behaves in a bull trend. And this is a perfect example of it right here. And we haven't even begun to test as we did over here. And typically what you'll do, you'll get tests of this level before the market rolls over. And that's also consistent with the 10-day moving average getting extreme and then the market continuing to grind higher for some amount of time. So that's something else to keep an eye on. Okay, let's look at another technical perspective that I think is very important at the moment, and that is breadth. Not breadth, VIX, the volatility index. And you can see this was the January high. And since then, we have had 1, 2, 3 instances where VIX has declined to the 20 level. If VIX continues to decline and it reaches, before there's any significant retracement, 20 or below, then it's not outside reasonableness to think that this market, the SPX, could reach 4,200 before there is another leg to the downside in this market. So Again, we have exogenous events. We have the Fed meeting on Wednesday, and then we have the midterm elections the following Tuesday. It's going to be an interesting next couple of weeks, to say the least. Okay, let's look at some other stuff here. I put this in the report. The dollar, which is critical. Everything is linked. Everything is highly correlated. This is initial evidence the dollar could possibly have put in a very important top. It has made a lower high and a lower low. This area, this 112 area, is important for a bullish, an immediately bearish case. Let's look at notes. And notes are really between, I mentioned in last week's report that notes could be forming a buying tail, and indeed they did. Now notes may be forming a balance area prior to this Fed announcement and the attendant verbiage surrounding that Fed announcement between about 111 and 110.5. A couple of other contracts that we like to follow and trade. Crude. Crude is broken out of a balance area, a minor balance area here. So the area to the downside, if crude has resumed a strong uptrend, we had a very strong up day on Wednesday, conviction, as we broke out of this balance area. So this is the important downside level for an immediate bullish case under a swing trade scenario. And we'll take a look at gold. Gold is in, as I have been saying for weeks, gold is making lower lows and lower highs. Is this the latest lower high? It's possible. I would not want to be long on a close below 1621. On the other hand, if gold can exceed the high of the 26, then maybe we want to see what happens if it can climb above about 1738. But for now, I would not be favoring longs in gold unless gold can take out and close above the high of 1026. Okay, guys, one last thing. I would very much appreciate it if you would subscribe. I would appreciate it if you would like the video. And if you have comments, by all means, please post your comments. If you have questions, I'm happy. I will respond. And feel free to spread this video far and wide. Have a great week.